Hi everyone, today is the 9th of June 2019 and I hope everyone's enjoyed their long weekend so far. My name is Eng Sivyang and I'm a certified practicing accountant and a registered tax agent and also a self-managed super fund specialist. I just want to share with you some year-end tax planning tips today. So the first step is that it's very important that you know where your tax position is to get your financials accounts up to date. So say if you are a small business owner, you need to get your bookkeepings up to date so you know exactly how much profit that you make for this year. And if you are an investor, it's very important that you get all your assessable incomes and everything's into place, so you know exactly your tax positions is. So how much tax that you pay is depending on what structures that you have. So say if you are a small business owner and you're operating through a company, then you know that if you're making profits on your business, then the tax rate is 27.5%. But if you're an individual, then it can go as high as like 47%, including the Medicare levy. So it's very important to know your tax position, how much your taxable income is. Then we can work out how much your estimated tax payable would be. So that's the first step. So the second steps that you have to do is once you know your net taxable income so far, then you have to look at what sort of deductions that you can claim to reduce that taxable income. And one of the things that you can do before this year end, you can make your superannuation contribution. It's called concessional contribution up to maximum of 25,000. But you have to be careful as well, because if your employer already makes some contribution for you, then you can only make the difference and you cannot go over the 25,000, the maximum contribution mark. And that's a really good deduction because when the money goes to your super, it's also a kind of your retirement saving as well, and you can also reduce your tax as well. And another really good news is if you have to buy some equipment, each equipment the cost is less than 30,000, you can claim all the amount, like you can write it all off. So if it's for each item, so if it's less than 30,000, and that will help to reduce your taxable income as well. And also if you are leasing some equipment, you're paying leasing, you're paying rent, you're paying subscription, all these you can prepay them. You can prepay up to 12 months, and that can also reduce your income as well, reduce your taxable income down as well. And another thing you can do is if you have to incur some expense, you already get the goods and you got the invoice before the 30th of June, but you haven't paid them yet, you already incur. Even you haven't paid them, you can still claim that deductions. But you only want to spend the money if you have to, not just because you want to get the tax deductions and you just spend the money, if you know what I mean, okay? So tip number 3 is like once you have all this information, then it's very important that you put it into your Excel worksheets, like how much is your income, and then your taxable income, and then all the deductions that it's available to you, and to work out your real tax positions, your tax payable. So if you I know it might sound a little bit complicated to you, but if you need help, and you can contact us, contact our TMS, or contact myself, or you can private message me, and we can sit down and help you to do this year-end tax planning. So thank you very much, and I hope you all have a nice day today.